Okay guys, welcome to today's video. So in this video I will just be sharing something quick, common mistakes that we SMC trader we make, right? Common mistakes. Now it's very important that sometimes we are humans, we do get overwhelmed, right? We do get overwhelmed with emotions, with our previous analysis that we have done in the past based on the market. But I can remember telling you guys that whenever you come to the chart every day, you want to at least reanalyze the market to see certain changes that might have happened overnight, right? Now, just like the way you have the market moving, right? You have different market makers, right? They are not one. Your money does not, your retail trader, your money does not even make price to move. Now, we have thousands and millions of market movers, those people who have the liquidity to move the market. Now, and those people are also humans that are residing in different regions. Some of them are in America, some of them are in Asia, in different sessions, just the way you're trading different sessions, right? So that's why you might be asleep and market movers in another region doing another thing. They're deciding to sell the market, deciding to dump the market or pump the market based on whatever review they have or recess, what English will I even use, they have decision they want to make, right? So what does that mean? It means you want to always check the chart to see what is changing, right? Bias can change easily. Market can be in a bullish structure and decide to shift structure to the bearish. Market can be bearish and decide to shift structure. Your The ability to recognize this quickly will prevent you from making losses, right? That's why as traders we don't have specific bias, right? We trade daily. You can have general knowledge on where the market is going to the longer time frames, but if you want to trade, you want to pick daily trades, you can have, all you just need to do is to know where the market is going based on the trade you want to take at that particular point in time. I'll just give you an example right here. Now this is other USDT, right? Now we were moving bearishly like this. We had this swing high right here, low, high, low, right? Then all of a sudden we saw an aggressive move to the upside. Market made a pump. So let me go to analysis time frame, which is the 4-hour time frame, right? So we saw this move to the upside. There was a sweep of this low, beautiful, an aggressive move to the upside, break of structure right here, right? We have this market structure shift right here. Now it's clean, so you would want to take trade from the breaker, right? This block that shifted this structure right here to the downside, right? So it's a what? Breaker block, right? It broke structure. Market aggressively took it out. So the last bearish candle right there would want to serve as a what? Breaker block. So you mark it. So let's do that very clean. Like I said, me, I love using the bodies. Right. So I'll take that last bearish candle like this as the breaker block. Okay. Now what happens? Market came the first time, right? Induced this block, right? It did not even tap on this. I don't know what particular platform am I even using to review this. This is not a futures chart. This is not a futures chart. On the futures chart, it did not even tap on this block. So this first move was the inducement. Market coming and giving you this second tap on that structure is the good buy. You can do the test. You can do the, what's it called? You can back test it on your charts, other USDT, right? So you have the first setup here for market. Now what happened? If you look at this chart very well, let me switch this to the 1 hour time frame, right? Even if you're targeted this high, this you're buying here. Even if you're targeted this high, this is take profit 1:3. If you targeted this high, this is a beautiful 1:4 trade. Now you are done. Buy, beautiful trade 1:4. Now, if you now look at the chart, what happens next? If you go to the analysis time frame, when market made a shift from this low to this high to give you full TP, there was no continuation here. It means market did not actually give you a body close above, right? No body close even above this high, no body close even above this structure. You just have that sharp sweep because of this impulsive move momentum from here that market bought from this breaker. You just have that move, right? If market wanted to continue going up, market would have given you what? A body close above, right? On your analysis time frame. Seeing that alone, and now market is coming aggressively, coming back, you want to take another buy? No, you will only wait for what market would do. At this point now, immediately market shifted that structure, swept this liquidity on the 4 hours, it came back and took out the previous low here on this your breaker entry. So at this point now, market shifted structure right here. Market has swept a high, which is external range liquidity, and has shifted structure. Remember, this breaker, for market to even buy from this breaker block, it has tapped into some liquidity on this region. The market has shifted structure, right? Will I be looking to catch a buy from, even if I want to even catch a buy, I'll be looking to catch a buy from the other block below, right? I'll be looking to catch a continuation trend from the other block. So at this point now, I'm not even looking to catch any buy trades right here. And even if I want to catch a buy trade on this block, because of this sweep on 4 hours here on the analysis 4 hours analysis time frame, because of this sweep, remember it was this low that gave birth to this high, and market did not close above, and there was a sweep of this liquidity here, and market is coming aggressive down. So there's a possibility that this guy also will be swept. But if you want to take a trade, you will not take an aggressive trade. All you need now on this kind of setup is to look for why are you doing that? Because this low also served as a low that has swept liquidity and broke structure. Market bought from the breaker to the upside but could not close because of the sell pressure. Now market is coming down aggressive to downside. Will I be putting my entry at this other block to take trades aggressively? No, I would not want to do that. Why? Because market has swept this liquidity, and if you are looking at this on the 4 hours time frame, this was even the tap we had from here, the imbalance here, and there is also another imbalance waiting below it. Market has tapped the first one, refused to go up, refused to create a break above, coming back down. There's a possibility that market will be coming to this place. So will I be stubborn on my bias? No, I would want to look for market reaction. So even if I want to take a trade off this place now, I will not take a trade aggressively off this 1 hour order block. I won't. Why? This place can be serving as an external range liquidity for me, for price to tap into what? This 4 hour point of interest also. So would I be taking aggressive trades? No. Is it a good point of interest? Yes. But if market is coming down here, you would not take a trade off the POI. You would wait to see if there will be a change, a shift in structure before you would want to take any trade. And even if you're taking any trade here, you would also consider the 4 hour shift that market has already made. Did market create an imbalance? Would the move on this place be a retracement for markets to go higher a little bit to sell all the way down? Those are the things you need to consider. Consider all the manipulative moves, because manipulations are part of the market. Consider all the manipulative moves that market can make. You can see what is happening now. This breaker block, market is even resisting. This breaker block that acted as support is even acting as a form of resistance to push price lower. You can see the retracement candles to push price lower to the downside. So at this point now, you're not looking to catch any aggressive buys. You can even be looking to catch sells. It happens with other pairs. I think there's one on ETH. Let's take a look at it. So you guys need to understand biases and how to trade it, right? Always look from your analysis time frame. 4 hours time frame is your analysis time frame. If there's no break of structure or market structure shift on 4 hours, you should not just believe what you see on the 1 hour. For example, if you go to the 1 hour time frame now, you would look at this low, and this low moved all the way and there was a break of structure here. These are the common mistakes. We are talking about common mistakes some of the SMC traders we make, right? Now you would be looking at this as a break of structure because there's a body close, but this is 1 hour time frame. This is not your analysis time frame. You get? So now if you go to 4 hours time frame, what is ETA showing? Is this a break of structure? No, this is a sweep of the high. So it means this low here, did not create a new high. So this is not a swing low. So if you're looking at this as a swing low now, because why? You used 1 hour to analyze this, that, oh, market create a break of structure. So you are looking for POIs around this region to buy, to continue buying. But if you go to analysis time frame and you look at it very well, you're like, oh no, market just sweep. So what would I be looking for? I will not be looking to catch buys because market just swept liquidity at the top place and closed bearishly to the downside. Aggressive candle movement to the downside. All I'll be looking at is to see if I can even catch sells, not buys. So what would I do? I would wait. Immediately the market swept this low, right? Immediately the market swept this low. What happened? This was the previous low that gave birth to this high. All you just need to do to identify if market has created that break of structure, that market structure shift. And here you confirmed it. This was the previous low that gave this high. All of a sudden the market swept this high and shifted structure. You can see a clean market structure shift. So am I looking for buys at this? Is the structure bullish from higher time frame? Yes. You can see how market broke out from this region. Oh, I've even used this chart to analyze before. You can see how market broke out from this bearish trend, right? Broke out aggressively. But now you saw that market created this form of shift here. So at this point in time, you're not looking for buys. It means market might be looking for possibility to trade down into lower regions, into discount regions for a good buy. Why? Because from here, from this swing low to this swing high, on your 4 hours time frame, there is even a clean break right here. So what does this mean? This means all this low is a swing low, this high is a swing high. So if you even do your Fibonacci region to the downside, you see that, oh, market even have good discount regions to sell from. So if market does not continue going up and does a shift, it means market wants to fall down into lower regions where it might continue the bullish structure or not. You do not know. But what are you looking at? You're looking at the current reaction of the market. So at this point now, you have seen the shift here. You now go to what? 1 hour time frame to look at this. So look at what 1 hour time frame gives you. This low, and this is where market shifted structure, right? So all you just need to do now is to look. If I want to catch a sell, of course I took this trade actually, beautiful. When market came down here and shifted structure on the 4 hours, this was the 4 hour structure that the market shifted to the downside. 1 hour time frame now, if I'm looking for sales, there was a low, a high, a low. Market created an imbalance right here on this 1 hour time frame. What did market just do now? Market tapped into what? The 50% region of this imbalance, and you see the sell started a continuation sell. You have been taught all these things in the past. We have talked about it, but most of you are still confused, right? Because you are stubborn to a particular bias in your head without looking at the market, looking at the current reaction of the market. If you have a bias that market will be bullish, it doesn't mean market will just be bullish in a straight line. Market can still make some maneuvers, but all you just need to do is to react according to the way market is reacting. So at this point now, this would have been a good trade. Entry at here, put your stop loss across this swing low, because what market did here was a beautiful move from here, created a high, then shifted, right? Shifted here, then you entered at this imbalance to continue the sell move to the downside, and you can see how the market is selling aggressively. Why? Because it has taken a sweep of the high. Market will go into lower regions to target any imbalance, any form of where there will be discount regions for price. This is how you trade. So you would have caught a beautiful trade setup here. It happens over and over again on the charts. Just like that trade now, the last one we saw on ADA, you caught a beautiful buy from the breaker, right? The market is bullish. But what did you observe after hitting TP on that harder trade. You observe that the 4-hour candle that even moved to your TP did not break close with a body. On the 1 hour, you see a body close, but on the 4 hours, what happened? It closed something like this, which means a sweep of liquidity. It means market has swept a high. It will be going to it will be targeting other regions where liquidity is resting. So if you are buying across that zone, you are buying at premium. You would be taken out, right? So these are some of the mistakes, right? Uh, we SMT traders make, because sometimes we are overwhelmed with our analysis, and of course, someone that's taking that other buy is looking for another buy, right? You're looking at ETH from this side, pumping all the way, and did a break of structure. What's this? And did a break of structure to the upside. You'll be like, oh, you want to catch another trade. But look at this. It was a sweep of liquidity on 4 hours. So you want to make sure that, you know what? Just make 4 hours candle, 4 hours time frame your friend. 4 hours time frame for your friend. If you see a valid break of structure on 4 hours, forget about what you're seeing on the 1 hour 15 minutes. You just do that for your entries, right? If you see a POI, let's say an imbalance of 4 hours, you want to pay respect to it very, very well, right? So these are the common mistakes, right? SMC traders we make. So all you just need to do is to go to your charts, right? Review your trades. Any altcoins you traded, go and check the 4 hours time frame. How did market behave? Check the previous swing lows and swing high that the market has created before that time, and watch how they behave before you know how to react. It's just all about reaction. The market might come to this region now and decide to react in another way. If we see that reaction, we will now look at it very well to understand it, what we know. It must be what we know before we trade it, right? So that you don't make those mistakes and stick to a certain bias. We do not stick to a certain bias. If market is giving us a bullish reaction, we trade it. If market is giving us a sell side reaction, we trade it, as long as we are seeing what we know. So you can see this beautiful entry here. It's a beautiful trade setup, a very, very clean one on this low to this high. Continuation trade immediately after the shift, immediately after this market shift. But no, you're looking for buys. You will be taking out aggressively to the downside. Okay, so that's just the reason why I did this video, particular topic, so that you don't get, always notes, always check reactions very, very well before you go to execute a trade. I think in the past we talked about different ways market can shift structures, right? We talked about different ways market can shift structures, different ways we talked about it. So you can watch the previous videos and you get to understand. So thank you very much, guys. That will be all for today. I don't want this video to be very long. Make sure you are studying and you are always backtesting, right? Don't be too quick to execute a trade. Always backtest and look for the reactions. Now you've got how market reacted here. It's going to repeat this same reaction in the future, right? If you take note of it, you would be able to trade it next time it reacts like that. Beautiful trade. Let me go and take profit, my Jerry. Let me go and take profit. It's a wonderful trade. I take profit around here, a region around this order flow region, right? Where I know that there is support and resistance acted right here. So this would be a good area to take out your sell profit in case market wants to react from this region, right? If it doesn't, then you know the next move. So take care, guys. See you on the next one.